RJ, good to have you back on. What are you looking for this week? How has the themes and the focus sort of changed, if at all, from JP Morgan's numbers last week?
This morning. That's a great question. So Friday was a pretty wild day in the markets, especially within the dynamics of the financials tape. JP Morgan was a bit of a surprise with higher expenses. Now investors, I think, are going to be looking to see if higher expenses at the banks are a theme going forward. Now, I think, what we saw Friday was a big unwind of larger cap bank exposure. More of the universal banks kind of sold off. The banks that are more levered to capital markets activity, normalizing. And what we saw starting kind of midday after the initial weakness was investors coming into more of the regional bank names that are levered to higher rates. And I think that is probably going to be a trade, especially on a relative basis. I'm not sure on an absolute basis, especially if the tape continues to be weak. But I think that trade, that relative trade of getting into regional banks that benefit from higher rates and kind of away from the more of the universal banks that are levered to more the FIC trading, M&A, and different types of fees that they've been generating over the past couple of years. I think that's going to continue.
And I think if what I'm hearing is through it, RJ, is this. I know that we're CNBC and we love the big banks. We love JP Morgan and Goldman. We love talking about them. But it sounds like we're going to MBBA, make banking boring again. That is, rates rise up. It's going to be these spread lenders, as you call them, these regional banks that we don't talk about very much. You know what they do? They collect deposits and they lend money. That's it. But it sounds like those might be the places to be.
Yeah, I think that's right. I think you nailed it. I mean, it has been such a long time since we've gone through a rate hiking cycle. I mean, we tried a little bit toward the end of 2018. That didn't work out too well. So we've been stuck in this lower for longer environment where investors within financials have been looking for financials that can pull on other levers, such as strong M&A, strong trading, whether it's fixed income or equity, and fees. And I think what you're going to see over the course of 2022 is I think you're going to see that trade kind of go the other way, to your point, where, we're going to get back to a little bit more boring, traditional, regional bank names that lead us higher, especially on a relative basis.
Yeah, the KBW NASDAQ Bank Index and the BKX, they're at or near all-time highs. So your named indexes, RJ, are doing great. Are there any names inside those indexes that you guys like more than others right now?
Well, so into earnings, congratulations to our bank team. It looks like our bank research team, it looks like they nailed it pretty well, especially on Friday, to have more of a tilt toward the regionals. I think this week coming up, we like CFG, Citizens, into earnings. It's a cheap bank that's levered to higher rates. I think it gets a little bit harder from here, just because to your point earlier, banks, whether regional and larger cap banks, are both up over 10% on the index level to start the year. So I think it becomes more of a stock pickers game. So we like the cheaper banks that are still massively levered to higher rates, such as Citizens Financial. So CFG would be a good pick there.